The following information was extracted from the books of the Ministry of Science and Technology for the fiscal year ended 30th June 2014. Which ministry? Ministry of Science and Technology. This must be a government ministry. In government, we normally do financial reporting using what we call IPSAS. We normally do financial reporting using what we call IPSAS. IPSAS is International Public Sector Accounting Standards. Then I can see in this case here what they have given me there. Yeah, we have transfers from Exchequer. Remember, the Exchequer is the National Treasury of Kenya. When money is collected by KRA, that money automatically is taken to the National Treasury of Kenya for onward transfers. So in this case here, the National Treasury of Kenya will be sending some funds, in this case here, to ministries. So like now, Ministry of Science and Technology has a transfer from, so it's an income. Yeah, so transfer from the Exchequer of 693,500. So remember, whatever items you have here, they could either go to the statement of financial performance, they could either go to the statement of financial performance, which is the same as the income statement outside here. Income statement outside here, all right? Yeah, and then number two, the second statement, they could as well go to what we call the statement of financial position. Financial position is like the balance sheet. Financial position is our balance sheet like that. All right. Okay. Right. Now, ladies and gentlemen, then, every item that we read, I would want you to tell me where that item will be, and you must write on your past paper that item where it is going to be placed. So we start with the first one. The first one is transfers from Exchequer. This is revenue. So that one will go to the PER. So in this case here, we are saying there that transfer from Exchequer will go to the performance statement, just like that, PER. You write like that. And then we have inventory. Where do you think shall we take inventory? Ladies and gentlemen, where do you think shall we take inventory? Where shall we take inventory? You are writing that on the past papers. Where shall we take inventory? Please talk to me. Where shall we take inventory? Statement of financial position. Thank you very much. Inventory will go to the statement of financial position. Specifically, this is a current asset. This is a current asset. Thank you very much. From there, we have reserves. Where do you think shall we take reserves, my good students? Reserves will go to the position, isn't it? Statement of financial position, and this is an equity component. It's an equity component. Thank you very much. It's an equity component. Very good. So we have there accumulated surplus. Accumulated surplus. Where do we take this accumulated surplus? Yeah, statement of financial position under the equity components. Under the equity components. All right. I hope everybody is able to follow this. Then we have receivables. Receivables position. Statement of financial position. Current asset. We have in this case here cash and the cash equivalents, statement of financial position. We have encumbrance payables. Yeah, the name payable, even if you don't understand the meaning of encumbrance, the name payable tells you that these shall go to the statement of financial position. We have accruals, that is statement of financial position, liability statement of financial position, long-term borrowings, statement of financial position, finance cost. Where shall we take finance cost, my students? Where shall we take finance cost, my students? Talk to me. Where shall we take? Yeah, Income statement, although we don't call this income statement in the public sector. In the public sector, we call it statement of financial performance. Statement of financial performance. You'll be writing in brackets PER. As you write this in your past paper, on your past paper there, like now this finance cost just by the side, you write finance cost, and then you write here PER for performance. Thank you very much. From there, we have office administration cost. Again, that is performance. Yeah, statement of financial performance. We have, in this case here, consumables used, the stationaries. The stationaries used. Where do we take stationaries used? Where do we take stationaries used? Performance again. If there were stationaries, in this case here at the store, stationaries in the stores, then that one would have been part of inventory. But if consumed, if this stationery has been consumed, then it's expensed in the statement of financial performance. Thank you so much. Then we have, ladies and gentlemen, transfers to other ministries. Transfers to other ministries, that we got money from the exchequer and we felt philanthropic enough and also transferred this to another ministry. Not even about philanthropy. Perhaps, yes, we are the Ministry of Science and Water Technology, but our staff may become sick and then they seek for treatment at Kenyatta National Hospital. So you see, Kenyatta National Hospital is a government parastatal. So she'll be able to do the transfers to KNH. So of course, this is an expense which will go under the statement of financial performance. Statement of financial performance. All right. All right. Then we have, ladies and gentlemen, the next one there. No, I think I skipped something. Yeah, transfer to other ministries. Yes, I'm okay. Salaries and wages, performance. Property, plant, and equipment. That is an asset. It will go to the statement of financial position. Payables will go to the statement of financial position. Transfer from other ministries and income to us. Yeah, an income to us. That is statement of financial performance. Other revenues, statement of financial performance. Forex gain. Please talk to me. Where do you think will I take this forex gain? Anything that is gain, where do we take it? Where do we take it? Can we take this to the statement of financial position? No. This will be statement of what year? Financial performance. Statement of financial performance. Then we have fees, fines, and licenses here. We've been able to fine people there. It's an income to us. That is a statement of financial performance. We have royalties, performance. We have research expenses, performance. So required statement of financial performance for the year ended 30th June 2014. I will get all the marks there. I will get all the marks there. So then what do I need to do, ladies and gentlemen? What do I need to do, ladies and gentlemen, for the students who have just joined us here? We are doing this question, which is May 2015, question number 3A. We are doing May 2015, question number 3A. May 2015, question number 3A. So remember the statement of financial performance, we start by mentioning the name of the parastatal here, the name of the government ministry. So it is called the Ministry of Science and Technology. Statement of financial performance. Statement of financial performance. Statement of financial performance for the year ended 30th June 2014. 30th June 2014, and then you underline like that. You underline like that. And then straight away, remember the statement of financial performance is that statement that will be able to show our incomes and the expenditures. So you start with incomes. We start with incomes. Fortunately, you have been able to designate all those transactions. Ours will be to copy, to pull them down. So is there a student who is able to identify incomes there? We pick them very fast. Anybody who is able to identify incomes, we slot them here under incomes. Under incomes, May 2015 question number 3A. Anybody who is able to see our incomes from this question? Yeah, you reason like you are the person in charge of that ministry. Are you able to see your incomes, ladies and gentlemen? Yeah, forex gain. Yeah, like transfer in this case here from the exchequer. Yeah, transfer from the exchequer. That's a very good income. Transfer from the exchequer. Transfer from the exchequer. How much is this? Shillings, millions. How much is this? Shillings, millions. Transfer from the exchequer, and then you tick. Whatever you pick here, you tick. It is 693,500. And then I can see, ladies and gentlemen, other reserves, no, Chris, other reserves cannot come. Reserves, other revenues, yeah, sorry, I'm the one who's reading wrongly. Other revenues, fine. Then we have in this case here, transfer from other ministries. Transfer from other ministries. The other ministries paid us. That is revenue to us. So this transfer from the other ministries, ladies and gentlemen, what do we have there? We have 12,000. 12,000. Do we have something else? Oh, yes. We have the forex gain. Forex gain. So forex gain is how much? Forex gain, I can see 28,000. Forex gain, I can see, is it 28 or 38,000? How much is forex gain? How much is forex gain? How much is forex gain? 38,000. That is why you need to, 38,000. After forex gain, I can see in this case here we have fees, fines and licenses. Fees, fines and licenses. How much do we have there as fees, fines and licenses? You guys have got better eyes. Fees, fines and licenses. How much do we have there? 164,000. Thank you very much, Lillian. Oh, yeah. After fees, fines, and licenses, I can see, ladies and gentlemen, we have royalties. Royalties received. Whenever royalties, the examiner is silent, we shall always assume that we are the ones who have royalties to receive. Whenever the examiner just writes the word royalties, these are your incomes. So Chris Fay is giving me the royalties received, 23,000. And then we shall finish here with other revenues. Other revenues. Don't put other revenues in between. Don't put other revenues in between. Other revenues should be the last one. So other revenues, are you able to see the figure there? Other revenues? Other revenues, are you able to see the figure there? 203,600. 203,600. 203,600. Thank you so much. 203,600. Is there any income that we may have left out? That is why in an exam, please remember in your exam paper, they don't want you to write things, but putting ticks there is allowed. You can put marks, but you don't write anything inside. All right. So like now here, you should be able to tick, and you'll be able to see, so that when you progress, you'll be able to know what you have left, what you have not been able to utilize. So assuming, ladies and gentlemen, we have everything, is there somebody who is able to give me the total income here? Anybody who is able to give me the total income? I'm being given a figure of 11, 24, 100. 1134, 100. So I'm being given a figure of 1134, 100. Thank you very much. 1134, 100. 1134, 100. 1134, 100. So from there we come and now look at expenditure. You write here, expenditure. So expenditure, there are quite a number. Fortunately, we were able to mark them very, very well. So I can start with any. Are you able to remember our expenditure? For example, we have finance cost. Finance cost, that is our first expenditure there. How much do we have, you good students of mine? How much do you have there, you good students of mine? So in this case here, finance cost, we have here shillings, millions. Can have our two columns. So finance cost, I'm being given a figure of 28,000. Thank you so much. After finance cost, we have administration expenses. Admin expenses. Please read for me. How much is the administration expenditure? How much is the administration expenditure? I'm being given a figure of admin expense of 355,000. 355,000. Thank you very much. From there, I remember consumables that were used. Consumables used. Consumables used how much? Consumables used how much? 112,400. So we have here 112,400. Consumables used 112,400. Apart from that, remember we also transferred some money to other ministries. We shall take this as an expenditure. So transfer to other ministries. So we have here transfer to other ministries. This is a cash outflow. It's an expenditure. So transfer to other ministries. How much do we have there? 133,600 million. 133,600. Thank you so much. Apart from that, we have salaries and wages. So we have salaries and wages. C. How much are the salaries and wages? How much are the salaries and wages? How much are the salaries and wages? 283,000. Thank you very much, Felicitas. 283,000. Thank you very much. Apart from that, we have research expenses. We have research expenses. So research expenses, how much do we have there as research expenses? Oh, yay, 44,000. 44,000. Thank you very much. Apart from that, we also have, nothing else. So please come and give me the total. How much do we have there as our total expenditure? Give me the total here. How much do we have here as our total expenditure? As our total expenditure, 956,000. So this is 956,000, like that. Then remember here, we don't talk about like net profit. No. If in this case here we get like what we would have called a profit, then that one here will be a surplus for the year. Surplus for the year. So surplus for the year, how much? Yeah, if it's a loss, we call it a deficit, right? Yeah, so I'm being given a figure of 178,100. I'm being given a figure of 178,100. So you can see, ladies and gentlemen, this is not tough at all. You can see this is not tough at all. Is it 178 or 173 CJ? 178,100. This is not tough at all. Not tough at all. Not tough at all. Not tough at all. 178,100. Thank you so much. Thank you so much. So that is the end of our statement of financial performance. That is the end of our statement of financial performance. Is it clear up to here, ladies and gentlemen? Is it clear up to here, ladies and gentlemen? Is it clear? Yes, Sawela, yes. Yes, thank you very much. Thank you very much. So can I rub this? 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 Thank you so much. Yes. All right. Let's rub it. Let's rub it. Let's rub this. All right. Ladies and gentlemen, after that, part 2 of this question, they want us to give them the easiest of everything. Yeah, the statement of financial position as at 30th June 2014. So you start by writing the name of the entity as usual. You start by writing the name of the entity to demonstrate broad understanding of the financial reports. So we call it Ministry of Science, Ministry of Science, Ministry of Science and Technology. Ministry of Science and Technology. Now we are talking of statement of financial position, statement of financial position, statement of financial position as at when? As at when? As at 30th June 2014. 30th June 2014, like that. And then you underline. So remember, statement of financial position, we are basically showcasing our assets versus how the assets are financed. So we are showcasing our assets, and our assets must be broken down into two: non-current assets versus current assets. Yeah, so in this case here, we begin with assets, where our very first assets in this case here are what here? They are non-current assets. So we have here non-current assets. So non-current assets. Are you able to remember our non-current assets, my good students? Are you able to remember them? Are you able to remember my non-current assets? Are you able to remember them? Non-current assets. Like which one? PPE. Thank you so much. So we have property, plant, and equipment. So we have property, plant, and equipment. So we have here shillings, millions. Shillings, millions. Yeah. You can even use one column. There is no problem. Use actually one column. Use one column. Yeah. So in this case here, PPE figure, I'm being given a figure of 1246. 1246,000. 1246,000. That is property, plant, and equipment. Of course, for government, it will be quite hard to get things like goodwill. Very, very hard. Very, very hard. So basically, our non-current assets will be these ones here. From there, we come and give them the current assets. Current assets, are you able to remember examples of current assets that we have? We had marked them. Don't forget, we had marked them. We had marked them. So we have inventory, receivables, yes. Inventory. How much for inventory? How much for inventory, CJ? Thank you very much. How much for inventory? 30K. So inventory is 30,000. 30,000. Then you have told me that we have receivables, right? We have receivables. Receivables of how much? 50K. I'm being told 50K. Receivables of 50,000. From there, ladies and gentlemen, we have cash and cash equivalent. Cash and cash equivalent. Cash and cash equivalent. Cash and cash equivalent of how much? Cash and cash equivalent of 245,000. Of 245,000. So then are you able to add for me? Give me my total assets. Come here and give me my total assets. Come here and give me my total assets. Total assets, in this case here, total assets, how much do we have? If you add the three, actually from here, everything, add everything. Total assets, current and non-current. Current and non-current. How much are we getting, ladies and gentlemen? Current and non-current. 1571,000, isn't it? We are getting 1571,000. 1571,000. 1571,000. Yeah. Yeah. Now from there, we go straight away and look at the equity. Thank you so much, Angie. We look at the equity and liabilities. So we have here equity and liabilities. Equity and liabilities. Here you have to be very careful. We start with equity. The first equity component, we call this one there accumulated surplus. Accumulated surplus. The accumulated surplus given is accumulated surplus brought forward at the beginning of the year. At the beginning of the year, we had an accumulated surplus of 160,000. This is what was brought forward. And then we earned some surplus in the year. Do you remember the surplus that we got in the year? Because we are looking at accumulated surplus at the end of the year. 178, 100. So plus 178, 100. Plus 178, 100. So are you able to give me that figure? Are you able to give me this figure? Are you able to give me this figure, ladies and gentlemen? 338, 338, 100, 338, 100, 338, 100, 338, 100. Do we have any other equity components? Do we have any other equity components, my good students? Any other equity components? Yeah, the reserve. There is a reserve, yes. So we have a reserve. We have a reserve. We have a reserve. A reserve of how much? A reserve of 500,000. A reserve of 500,000. I hope you guys are able to remember these figures. I hope you guys are able to remember these figures. I hope you guys are able to remember these figures. So from there, we go to the non-current liabilities. So remember, it's equity, and then you attack the liabilities. When you are attacking the liability, you start with non-current. So now you start with non-current liabilities. So we have here non-current liabilities. Non-current liabilities. So do you remember them? These guys have forgotten the non-current liability. Long-term borrowing. So we have here long-term borrowing. Long-term borrowing. I'm being told long-term borrowings of 326,400. 326,400. Long-term borrowings of 326. Yeah, liabilities for long-term employee benefits. Liabilities for long-term employee benefits. Long-term employee benefits. How much? Liabilities for long-term employee benefits, ladies and gentlemen, I can see a figure of 56,000. A figure of 56,000. A figure of 56,000. 56,000. A figure of 56,000. 56,000. Ladies and gentlemen, those are the non-current liabilities that we have. We straight away skip, not skip, but we straight away, in this case here, move to the other liabilities, the current ones, isn't it? Current liabilities. Current liabilities. Yeah, my board not very nice. So current liabilities, what do I have for current liabilities? Are you able to see the payables? Yes. I mean, I should give somebody a present here. Payables, accruals, yes. So we have here payables. Payables, how much do we have there for payables? Payables, how much do we have there? Payables, how much do we? 156,000. You can just bring everything here. Payables, 156,000. And then we have accruals. We can only accrue for a period which is less than a year. Less than a year. So accruals, ladies and gentlemen, how much are we seeing there for accruals? Accruals, how much are we seeing there for accruals? Accruals, how much for accruals? Accruals, I'm being given a figure of 143,000. 143,000. From there, ladies and gentlemen, we have something else there called encumbrances payable. Encumbrance payable. Encumbrance payable. Encumbrance payable over how much? Of 61,500. 61,500. 61,500. So now you come and add everything from here. You add everything downwards from there. Add everything downwards from there. And then you tell me how much do we have there? What is the total equity and liabilities? What is the total equity and liabilities? Mm-hmm. They're not talking. Mm-hmm. 1581,000, eh? Oh, 1581,000. 1581,000. And I know why that is the case. It's because of this finance cost. The finance cost. How much do you have there as finance cost? There was an overstatement. I remember I marked this sitting. The finance cost. Because you know this is not a trial balance. They simply gave us figures and they messed. They messed. Not that one. There is one that was overstated. 28,000. Finance cost. There is one that has got 30,000 and it's supposed to be what year? 20,000. Yeah, there is an error in the question itself. In the question itself, inventory, let's see, inventory 30. There is an error in the question itself, but provided you are able to do all this, ladies and gentlemen, then straight away you are really a very, very good student. You have not messed anywhere. It's an error in the question because they never gave us a trial balance. You know, if it's a trial balance, which is balancing two sides, then you are good to go. You are good to go. So now in an exam, ladies and gentlemen, if you're told to do a statement of financial performance and a statement of financial position, do you think now you have got the know-how? Which now you can use in this case here to fix a few things here and there, and then you get most of the marks. You don't have to get like everything, but most of the marks. Great. So then please allow me straight away to share some handout with you here. Who is that ninja who has a very good email that I've ever been able to, I want to share some document. I want to share some document here. Please give me your email address. Give me your email address pretty fast. Anybody who is able to type the email address there pretty fast, I show them abracadabra something. Irene Onyango, great. So we have here Irene Onyango. I've never sent anything to Irene Onyango. Let me try Lilian Nyambura. Yeah. IPSAS theory. I'm only sending to this lady called Lillian. So Lillian will be able to upload this document here or even send it in our WhatsApp group. Two things, Lillian, once you get it, please upload it here. And then number two, send it on our WhatsApp group. No, I only don't want to type. I think I'm lazy. I'm lazy, and you can see now time is not on our side. I trust all my students. I mean, all my students are my babies here. I'm so sure most of you are in your early 20s, isn't it? Oh, wow, okay. Do we have some students? Yeah, I have two kids. Oh, yeah, great. Yeah, I remember when I met some of you. Yeah, now I know. When I met some of you some time back here, not all of you are very, very young. Yeah, now I know. But of course, majority of you are still pretty young. You are the Gen Zs, mid-30s. Oh, okay. Yeah, thank you so much, Lillian. So I believe now all of us have been able to see what Madam Lillian has shared with all of us. Yeah. So in the next few minutes or so, we are going to look at these past paper questions. Yeah. So now everybody has got access to these questions, right? Thanks, Lillian. From whatever you have done, I've been able to get access to it pretty fast. Now you can also confirm this from your past papers. April 2025, question number 1C from your past papers. In view of international public sector accounting standards, IPSAS 19, provisions, contingent liabilities, and contingent assets, describe 3 conditions that must be met before a provision can be recognized. You, my good students, do you know, first of all, how to differentiate between a provision and a liability? Of course, a provision is a form of what here, a liability, but it's a liability of an uncertain amount or uncertain timing. I repeat that a provision is a liability with some uncertainties, uncertain amount or uncertain timing. Uncertain amount, yeah, or uncertain timing. So for example, like you must have seen in the past what Shell did. Shell, in this case here, out of their negligence, they were able to pour lots of oil into some ocean, Indian Ocean, lots of it. And they were told, in this case here, you guys, you don't have any other option other than cleaning the ocean. You see, already an event has occurred. Now it is past, yeah, spillage of this oil into the ocean. So in this case here, there must be a historical event that has occurred, either legal or constructive. Yeah. So in this case here, cleaning up, of course, in the mind of Shell, they know at the end of the day, given that this is a big government that is telling them to clear up the ocean, they'll have to do that. So they know that there is a liability which will arise. What they do not know is how much it will cost them. It can cost them like $20 million or whatever. All right? So they don't know how much. And even how much they're going to pay, they may not be very sure, like which period will it be paid. So anytime they talk of a provision, always remember a provision is a liability whose exact amount is not known. You can estimate. And by the way, ability to estimate it is one of the requirements. Yeah, you can estimate, say, this thing will cost me $20 million, but you're not certain about it. Yeah, and you're not certain about timing. But there is something else in this case here among those conditions, the probability of you being required to undertake the transaction must be high. For it to be a provision to be shown on the face of the financial statements, it must be high. And we spoke of that being more than 50%, and we call it probable. We called it probable. So I read the answer. So we are told, according to IPSAS 19, a provision is a liability of uncertain timing or amount. A provision is recognized in the financial statements. Is recognized in the financial statements when all of the following 3 conditions are met. There must be a present obligation from a past event. The entity must have a present obligation. It's either legal or constructive, arising from a past event. For example, a government agency that caused environmental damage may have a legal obligation to clean it up. Ladies and gentlemen, remember there is a difference between legal and constructive. Yeah, constructive. You know, if, for example, you have had some employees in the past who have been retiring from RCM, and for every employee in this case here who has been retiring, you've been giving them Kenya shillings 2 million as a honorarium. So everybody retired 2 million Kenya shillings like that. You see, you have already constructed in the minds of everybody that upon everyone retiring, not resigning, but retiring, they get what? Here, 2 million. There is no law which compels you to do that. But there is you have constructed. Yeah. So in this case here, it could be a legal need, or in this case here, a need arising out of what you have been able to construct yourself. And when they go to the court of law, if you don't pay them, whatever you constructed, it has to be like that. You set what we call precedence. All right. So present obligation from a past event, the entity must have a present obligation, legal or constructive, arising from a past event. For example, a government agency that caused environmental damage may have a legal obligation to clean up. Then we have probable outflow of resources. It must be probable, i.e., more likely than not, that an outflow of economic benefits or service potential will be required to settle the obligation. For instance, where a court case is likely to be lost. So remember, this probability has to be high for it to be called probable. You know, those probabilities are normally true. When it's very high, it's called probable, more than 50%. When it's low, it's called possible. Possible. If it's possible, it shall not be shown on the books. It shall not be shown on the face of the financial statements. If it's only possible, it shall be disclosed in the notes of the financial statements as what here? As a contingent liability, if it's possible. If the probability is very small, 10%, 20%, all the way up to 49.9999. And then number 3, we have reliable estimate. The amount of the obligation can be reliably estimated. If the amount cannot be reliably measured, then a provision should not be recognized but disclosed as what we call a contingent liability. Ladies and gentlemen, up to there, are we really together? If they bring this kind of a question again, will you be able to get it right? You don't have to use their language. You don't have to use their language exactly, but you must be able to remember those 3 conditions. The one of probability, the one of you being able to estimate this transaction with a lot of reliability, because you don't know the actual amount, but you must be able to. And then, of course, there must be, in this case here, the concept of cash outflows in the future, arising out of what here, some past event that has occurred, either constructively or legally. You don't have to use their language. Yeah, you don't have to use their language. So somebody had told me to repeat this. You remember this concept? Somebody told me to repeat this in our last class. I hope now that one, we have done it some justice. We've done it some justice. Although I haven't gotten some feedback from you, have you now understood this concept of provision? All right. Oh, Chris is giving us a very good amount there, a very good concept there. That for government entities, in this case here, we have a provision of 100,000. Yeah, great. Thank you so much. Those yeses are very, very few, but we shall overcome. Those yeses are very, very few. We shall overcome. If need be, I can repeat, but nobody's asking a question. Now, this is something that has been asked. It was tested in April 2025. And it has been asked severally, where my students are being told here to distinguish between government grants and government assistance. So, ladies and gentlemen, first of all, tell me from your own language, and you can use in this case here, whichever search engines, what is a grant? What's a grant? It's an English word. What's a grant? What's a grant? What is a grant in your own language? Yeah, money given. I like that concept. It has been granted to me. It has been given to me for free. I love that. Yeah. Funds given without future refund. You can see what Solomon is telling us. Great. Thank you so much. Yeah. However, when it is grants, fine, you're given this money for free, but there are normally conditions attached. There are normally conditions that must be met. For you to recognize this as an income in your books of accounts for government grants, there will be some conditions that must be met. You're given a grant, it could be a research grant, you're given like this, but you can only recognize this, for example, upon the students writing a proposal, a well acceptable proposal. So if they don't write it they don't finish writing the proposal, you shall return the money. So the money fine is given for you for free, but there are normally conditions attached. Please never forget to mention the words what here, conditions like I like this, compliance, yes, I like donor grant. Thank you so much, Esirat. Great. So a government grants are transfers of resources, e.g. cash or assets, to an entity by a government in return for past or future compliance with certain conditions. Related to the entity's activities, grants are recognized in the financial statements when there is reasonable assurance that the conditions will be met and the grant will be received. For example, a grant to fund the construction of a public school. What I would want you to appreciate, ladies and gentlemen, is that basically a grant is money given to an institution. And it shall only be recognized as an income when we are so sure that the conditions attached to it shall be met. And then now we have government assistance. You know, government will be able to assist, ladies and gentlemen, in so many ways. Yeah, government will be able to assist in so many ways. Like right now, the government is assisting so many organizations in the agricultural sector by giving, in this case here, free fertilizers. Yeah, this is government assistance. Yeah, the government can as well come and give you what we call subsidies. Yeah, like right now, we're enjoying some reduced oil prices due to subsidy. Of course, the current government will not be able to accept very well, but some of us, we know that there is some subsidy happening. Primary school kids, of course, being withdrawn with the time, but still there are lots of subsidies. So if it's government assistance, you will not be able to recognize that in the statements, in your financial reports, because the subsidy is cutting across everyone. All right, cutting across everyone. And again, you know, that can be withdrawn anytime. And normally, in most cases, it is non-monetary. So you're told government assistance, on the other hand, refers to government actions, actually this is the better term, actions, designed to provide economic benefits that do not meet the definition of a grant, such as provision of free technical advice or even guarantees. These are not recognized in income, but they are disclosed in the notes. For example, tax breaks or subsidized utility rates, etc. So, ladies and gentlemen, government assistance, remember, like the other day, you must have heard of this company which got itself into problems, corruption scandals, where Moses Kuri and other people in this case here were able to import oils, the edible oil, if you remember. Yeah. So what happened to that company? The company in this case here was importing. You know, for you to import goods from abroad, there is a process. You are in Kenya, the person selling to you is, for example, in China. You don't know each other. They may want, in this case here, bank guarantees. And the banks will not accept to guarantee if the government is not involved. So at the end of the day, it will be the government guaranteeing. So you see now the government is guaranteeing this institution here. That's a government assistance. So that guarantee, you can't tell me that guarantee will take you to the income, to the statement of financial performance. All right. So I would want you to put it in your own language, one sentence. What will you be able to say if you are asked here to be the difference between government grants and government assistance in your own language? Fortunately, I'm so much endowed even if you decide to use like simplified English, or even Kiswahili, or even your mother tongue. There is no mother tongue in this country that I can't speak. Yeah, because unlike you, I travel a lot. I like traveling. Like right now, when we close school after, say, 23rd, I will be away. Yeah, just traveling within Kenya in most cases. But whenever funds allow, I really go out. Yeah. So I get, in this case here, to know lots of cultures. Yeah. Like when you go to Meru, there are many places in Meru I could be knowing than somebody coming from Meru here. Yeah, many, many places. Yeah. So what is the difference between government grants and the government assistance? We shall overcome. See, that what do you mean? Yeah. Okay, I may not be very, very good at that, but I know how to say a calm dancer. Yeah. At least I am conversant with a few things. With a few things here and there. And I say that will be surprised. I've moved to many, many places in your area than yourself. Mogadishu. I've been in this case here to Somaliland. So I know the kind of agriculture which happens there. Good agriculture. You'll get in this case here very good. I even don't know why those countries like Somalia, they're at war. I really sympathize. Because the kind of productivity which is there, their fish is the best. Their beaches are the longest, the best. People there, hospitality over there is top notch. It's one of those countries like Somaliland, over lunch hour after people have done their prayers, if you pop onto somebody's home when they're eating, they welcome you. Welcome you very easily. Yeah, we shall overcome. We shall overcome. Struggling to hear from me? Okay, Borana, okay. I will come there, no problem. I'll come there, no problem. Oh, Suba, okay. Yeah, KNTC, thank you so much. Adan, yeah, I was looking for that name here. KNTC, yes. Yeah. Yeah, for government grants, there must be conditions being attached. And you only recognize this as your income once you are certain that those conditions will be met. Nobody's giving me. Yeah. So in this case here, merely government grants are monetary or asset-based support given with conditions and recorded in accounts. Government assistance is non-monetary support and often not recorded in financial statements. I think we should be able to adopt Millie Kaku's definition. Millie Kaku, first of all, I love your tribe. This must be very good, a very good tribe, right? Yeah. Government grants are monetary or asset-based. Support given with conditions and recorded in accounts. Government assistance is non-monetary support and often not recorded in financial statements. Yeah, great. So before I continue, ladies and gentlemen, so then we go to question number 4, same sitting. Question number 4, same sitting. I taught you this, but at times for students to answer this very well, it's not very easy. With reference to IPSAS-4, the effects of changes in foreign exchange rates explain the term functional currency. Ladies and gentlemen, functional currency basically is the currency of your primary economic environment in which an entity operates. It is that currency which your sales, that currency which your sales and the other costs in this case here are denominated in. Yeah. So for example, the functional currency of Safaricom is the Kenya shilling. Why? Because when you're buying Safaricom products, in this case here, we are basically buying using Kenya shillings. Even most of their costs, like all the employees, apart from the senior ones, they're being paid in Kenya shillings. So basically, if you look at that environment in terms of currency surrounding all or most of the transactions of Safaricom, it is Kenya shillings. So Kenya shillings in this case here becomes their functional currency. Please remember, functional currency is not defined by the country you are based in. You could be in Kenya, but your functional currency is the dollar. All right? Look at, for example, Panari Hotel. If you go to Panari Hotel, those guys, in this case here, their sales is in US dollar. Yeah, of course, they will accept your Kenyan shillings because you don't know, but they normally translate. They normally give you a bad rate. Yeah, so their sales is in dollar. Their top chefs are being paid in dollars, all right? There are huge loans because I went and asked, why do you charge us in dollars and yet we are giving you very good, home in Kenya here? Then they told me that, even our loans, everything is in dollars. So then for those guys, they are functioning in dollars. But 90-point-something% of farms in Kenya here, their functional currency is the Kenya what here? Is the Kenya shilling. Yeah, functional currency is the same as base currency. So functional currency, it is the currency that mainly influences your sales prices, your labor, material costs. Each entity must determine its functional currency based on the economic substance of the underlying transactions. For example, if a Kenyan agency earns and spends primarily in Kenya shillings, then Kenya shilling is its functional currency. Ladies and gentlemen, I'm so sure even in your own companies, you happen to be having some dollar transactions, but they are so few compared to the Kenya shilling transactions. So in this case here, the Kenya shilling overrides every other currencies you have there. So the major currency in your company is what we shall be using as our functional currency, and it will be the financial reporting currency. It is the financial reporting currency. All right. So we go to December 2024, IPSAS questions only. IPSAS questions only. So you're being told here to explain how monetary items and non-monetary items should be translated and the treatment of their respective exchange differences under IPSAS 4. Is there somebody who can tell me how, in this case, ladies and gentlemen, how do we handle, in this case here, any exchange differences that arise in monetary items? Monetary items like receivables, payables, cash at hand, you'll always retranslate them at closing rate. You'll always retranslate them at closing rate. Any exchange gain or losses shall always be captured in the statement of financial performance. In the statement of financial performance. Remember that. Remember that. Remember that. And I hope these things are entering very well somewhere there in your mind, because I want you to be able to rewrite them in your own words, Now, so monetary items such as receivables, payables should be translated at the closing rate, spot rate, and reporting rate. The resulting exchange differences are recognized in the statement of financial performance, surplus or deficit. Now, the monetary items are always carried at historical cost, are translated at the exchange rate at the date of the transaction. Yeah, at the date, so they are never retranslated. Yeah, if carried at fair value, they are translated at the exchange rate on the date when the fair value was determined. Exchange differences for non-monetary items measured at fair value are recognized in equity if they relate to a revaluation surplus. Forget about this. Forget about fair valuation over. You always remember, ladies and gentlemen, always remember the simplistic definition. This is what I want you to remember, my students, that whenever it comes to monetary items, those ones, we shall always retranslate them often. We shall always retranslate them at what we call the closing rate. Should we have an exchange gain or an exchange loss, then we shall be able to capture that in our statement of financial performance, also known as the surplus deficit statement. Surplus deficit statement. That is what we call monetary items. Non-monetary items are always captured in our financial statements at the very historical rate. When we bought them, we bought this in US dollars, but we exchanged this at the date of acquisition. Moving forward, anything that is non-monetary, ladies and gentlemen, will never be retranslated. That is the easiest way of knowing. Will never be retranslated. So there will be no effect of those items in our statement of financial performance. So before I continue, could you kindly, a good Samaritan, a good student, in this case here, can you kindly differentiate for me between these two terms, monetary items and non-monetary items? Differentiate for me. Differentiate for me. Great. Great. Cousins, I can see cousins are talking here. All of us are cousins. Don't bring that issue of politics here. All right. All right. What is the difference between more, and you'll be asked, it has been asked severally. It has been asked severally. I've been an examiner for some of these papers, yeah, for long, and I know those things that must always be there in an exam. I'm no longer an examiner. Of course, you can see now I'm becoming old. As I become old, of course, I have to leave some things, yeah, but I know those things that can never miss in your exam. I know them. I know them. Monetary versus non-monetary. What are monetary items in your own language? What are non-monetary items in your own language? Or in the language of those search engines? We are doing research, remember. What is the time? 3 hours. We still have lots of time. I'll be able to finish my questions. I will be able to finish my questions. So I'm waiting for the very best definition of monetary items. Monetary items. Monetary items. Monetary items. Monetary items. Non-monetary items. Like somebody, Chris, is saying that monetary items are initially recognized at spot exchange rate and at reporting rate when subsequently measured. So we are recognizing them at spot rate and we shall be retranslating them at the closing rate. The difference, we take it to the statement of surplus or deficits, or what we call statement of financial performance. According to Felicitas, monetary items are recognized in the financial statements, while non-monetary items are not recognized in the financial statements. Felicitas, this is not right. Remember, what we are recognizing and what we are not recognizing are those exchange gains or losses. You must recognize everything here, whether monetary or non-monetary. You will have to recognize those items in the financials, but they are gains. For non-monetary items, their gains can never be recognized. Thank you very much for trying. So 𝐷𝒪𝒐𝒐𝒔𝒆, monetary items are assets or liabilities to be received or paid in a fixed amount. I love this. Yeah, you're going to pay for these items at a fixed amount. They are translated at the closing rate at the reporting date. 𝐷𝒪𝒐𝒐𝒔𝒆, I love something, that if, for example, we have payables, I've been able to book in my financial statements a figure called the payables of 4 million. You see, I know the fixed amount I'm going to pay is 4 million. I can't go and bargain. It's 4 million. So you can see in this case here, it's fixed. The amount is fixed, and I'll be able to, not unless I'm getting bankrupt, I'll be able to pay that 4 million. But you see now non-monetary items like property, plant, and equipment, like my storage, house, warehouse, those warehouses, I don't want to sell them. So even if I attach some money to that warehouse and put that warehouse of mine in my statement of financial position worth 200 million, I know that 200 million is fake. Even if I decide to sell today, I can't get that 200 million. I can either get more or less. So that amount is not fixed. Please go and do lots of research about that. But as we disappear, of course, what we are saying, let me read 𝐤𝐥𝐤𝐬. Monetary items are always translated at a closing rate, and in case of exchange loss or gain, they are to be recognized at the statement of financial performance. Thank you so much. Thank you so much. So if you allow me, Irene Onyango, monetary items are translated at closing rate, while non-monetary are translated based on historical measurement basis, and they are never retranslated, right? They are never retranslated. Thank you so much. Allow me to go to the next question. That's something you have done justice. So still the same sitting. Question number 3A, outline the accounting treatment of government grants related to income in accordance to, it can be IAS, it can be IPSAS, same. Yeah. So in this case here, government grants. Yeah. Government grants related to income. Yeah, very, very easy. And I taught you this some time back, ladies and gentlemen. So remember, in this case here, we get an income grant. An income grant related to training. If we get an income grant, so we have here our statement of financial performance. So we have here revenues, etc. And then we shall be able to come here and have what we call other revenue. Other revenue. And the other revenue, if it is an income grant, we shall capture it as an other revenue. Other revenue. So we'll have here income grant. They have given us 10 million. We capture it like that to get total. This is method number 1. The other method, we could easily go to the expenditures. So we come to the expenditure here. If this government grant, for example, was regarding the government has given us money to train our people. And then the training cost, for example, was 100. And the government has decided in this case here to give us an uplift, promoters, what we are calling government assistance. So in this case here, they've decided to give us, for example, 10. So you can come and net it off here. So it's either you take it fully here as 10 and recognize training cost of 100, or you have 100 minus 10, giving us 90 there. So please listen, whenever it comes to income grants, what do we do with income grants, my good students? So income grants, we are told 2 methods are acceptable. As other income, the grant is presented as a separate line in the income statement or other revenue, or deducted from the related expense. For example, reducing employee training expenses. Entities must also disclose the nature and extent of grants, any unfulfilled conditions, and the potential consequences of non-compliance. Great. Yeah, we're only left with 1 page, 1 question actually. Yeah, you can see here. Now there are several, but they are manageable. So April 2024, question number 4A. Explain when an entity is required to recognize an asset in respect of taxes. When do you recognize an asset, ladies and gentlemen? Just from the IAS's definition, you can only recognize an asset, that this is your asset, that your vehicle is your asset, if in this case here, number 1, it has future economic benefits. Future economic benefits, that's number 1. Yeah, that you are able to draw cash flows from it. If this asset of yours, or rather your car, for example, is only getting money from your pockets, yeah, not assisting you anywhere, yeah, useless, then that can only be a liability. An asset, we must be able to have what we call future economic benefits. Then number two, it must be something that you are in control of. If you are not in control of that particular resource, then it is not your asset. So for example, in my house, I can't count the TV that I have is mine, despite the fact that I bought it. Yeah, actually, when there are children there, even for example, when Madame is there, they have their own programs they would want, in this case here, to watch. If you're just another sick husband, you can easily even get into loggerheads with your own children. So actually, the very best they know, if it's 7 a.m. or 9 p.m., they give you like 5 minutes. I mean, you just see highlights of your news, and then I'm there, where is the remote? So it's not something that is in your control. For this asset to be yours, it must be, for this resource to be yours, to be counted to be yours, it must be something that is under your control. You are able to direct its usage fully. And then, ladies and gentlemen, remember that these cash flows must be estimated with a lot of what your reliability. So anytime, it doesn't matter whether they are asking you this question from the IPSAS or whichever angle, there are things you're supposed to remember, the true definition of an asset. Once you remember that, then you'll be able to coin this in your own language in a way that you'll be able to impress the examiners. So we have here, explain when an entity is required to recognize an asset. Look at this. The entity can reliably measure the tax receivable. It's probable that the economic benefits or service potential will flow to the entity. The entity has control over the asset. You may not even remember this. The taxable event has occurred, e.g. income, and you may not be able to remember this, but you shall be able to, there are things you cannot forget there. I can see chat, sorry. Yeah, thank you, Millie. Can be reliably measured. Thank you so much. I can see Sirati laughing. I don't know why. Yeah, thank you so much. Thank you so much. Then they want us to explain the term transfers with 2 examples. Transfer mean it's inflows or outflows. Transfer refers to inflows of resources from another government or organization without direct exchange, like donations. Examples include debt forgiveness. You are supposed to pay this debt, but somebody has said, hey, I'm forgiving you. US says Kenyan debt, it's just like them transferring some cash to us. Donor grants to support education or health services. I'm so sure you'll be able to understand this better because you even have the handout, right? December 2023, question number 1C. Explain 2 key statements required under IAS 26. IAS 26, if I'm not wrong, this must be pensions, Yeah, pensions. We shall be able to check. Can somebody check that for us? Should have been IPSAS, not IAS. Somebody should be able to check that for us. IAS 26, what does it state? I watch from my phone. Great. Yeah, that's live. Yes, that's live. Great. So anytime, let me revisit this next time, because we should be tackling questions on IPSAS alone. But let me revisit this next time. Explain the term heritage assets under IPSAS 17 with examples. Heritage assets, ladies and gentlemen, we know that these are those assets which in most cases are owned by who? By government. Yeah, or NGOs. Yeah, government. So for example, the national parks. Yeah, those chimpanzees and whatever. Yeah. Yeah, you know, these national parks, we have the museums, yeah, like national archives around here, Moi Avenue. That is a heritage asset. Heritage asset. Now listen to me very well. Heritage assets are tangible, we're able to touch them, with cultural, historical, or environmental significance. Held for public access, education, and preservation. These assets are not primarily held for financial gain, because you pay something small, but at the end of the day, they're not for profit, really. Examples, historical monuments, e.g. Fort Jesus in Kenya, Mombasa, National Museum collections. Describe 3 characteristics of heritage assets: cultural or historical value. They represent national or global heritage. Non-financial motivation, not intended for income generation or resale. You can't get like government, in this case you're selling, actually even at times sympathize with us Africans. Like now I went to Karura Forest. There are people who are cutting trees there crazily. That's a heritage asset. You're not supposed to be cutting anything from there. I also, in this case here, passed via Ngong Road. There are things happening there. That's a heritage asset. There are things there which are of cultural value. Why would you want, in this case, to disinherit our future generations? Heritage assets, ladies and gentlemen, they're supposed to live with us forever. So difficult to value, they are very, very unique and often irreplaceable, making valuation and depreciation very, very challenging. So it's difficult to do what here to value. Non-financial motivation, not intended for income generation or sale, cultural or historical value. They represent national or global heritage. And that now marks the end of this. I can see charts here. Yeah, pension plans, yes. So the pension schemes, but that's IIS. I want to make comment regarding that in my subsequent session, where I will be able to bring just IPSAS like that. Otherwise, I'll be seeing you tomorrow at exactly 12 and at exactly 4 p.m. 4 p.m. 4 p.m. Yeah. So Sirat, we have done enough. What you have done, Sirat, is enough. That's very much enough. It can make you see places that you've never seen before. Yeah.